levels, etc. as well. So 0.25% lower on the Nifty, 23,428. It's down about 0.5%. The Nifty Bank is down about 0.5%. Well, that's accelerating now. 0.7% straight up. I mean, 160 points lower. So 23,400 is where we are now trading at as far as market open is concerned. So very quickly, swiftly, markets moving down. Nifty Bank is down 0.5%, 50,370. The mid-cap index is down about 0.5% as well. So yeah, I mean, across the board, there is more red than green. Look at the Nifty heat map on your screen, and I think it's got about 5 or 6 names up in the green. Everything else starting lower at this stage. I mean, the first sort of dip, which was 160, 170 points, has been bought into. We're about 90, 100 points off the day's low, or the opening low, I should say. But it's that kind of a day. It's kind of mixed and not very clear. So I'm not sure how much of that initial price action off the lows really we can read into. Surabhi.
Yeah, absolutely. I mean, it's in sync with the kind of opening and the kind of market action we've got across Asia. 100 points lower. And remember, the Monday low is in question. 23,350 was the low that we hit on Monday. It's the lowest we have been in this round of a sell-off that's been continuing, right from October onwards. Anyway, in terms of individual stocks, Adani Enterprises 10% down, Adani Ports 10% down. Let me complete the Adani group actually before I come back to the Nifty. You have Adani Energy Solutions down 20%, Green is down about 16, Total Gas is down about 13, 14, Adani Power is down 12. Even ACC, I mean, look at ACC is down 10%, Ambuja is down 10%. So it's a slam dunk really on the entire group. So that is one aspect of trade today. But beyond the Adani group, you've got weakness in names like SBI, down about 3%. Prashant rightly said we need to watch for the lenders as well. Just when sentiment is negative, some of the lenders also sort of get caught up in the storm. So quite a few of the banking names are on the way down. SBI is down 3% now. Dr. Reddy's is down because it has its FDA issues with one of the plants. There are several sort of observations that the FDA has issued. So that's a stock lower. NTPC is down to 2.5%. ONGC, BPCL, BEL. So the other big trend is that PSUs in general are down. SBI is down a little more than the others. Reliance, ITC, the heavyweights are not really helping, both lower by about 1.5%. So that's not really coming to the bull's rescue. Lever is lower, Titan is lower. Most of the consumer stocks, Tata Consumer, are down. Basically, it's all fall down, barring IT. That's the only space where bulls are trying to find safe haven. Infosys, Tech Mahindra, TCS, these are stocks that are seeing about a 1% buying. Cuts are getting deeper, 140 lower on the Nifty now.
Well, fairly volatile start is what we're seeing, on all these names. Well, our PSP projects, let's see how that one's doing in initial trade, because that had that deal. We had some bit of a run-up ahead of that. And that's why I said this morning that part of that good news could have already been in the price because the street was waiting for this deal to be announced. And now you have the Adani group that's in the eye of the storm. So that's why, in fact, that stock is, lower. You also have the telecom stocks that are in focus. And the reason that Indus Stars is higher is because the Supreme Court has ruled in favor of telcos. They are allowing tax credits on duties paid for infra assets like towers. So because of that, it appears that stock, in fact, after seeing a sharp correction, well, it's popped up in trade. Suzlon as well is up close to around 5%. In just a short while from now, we'll have the management that will join us. Coombs Drugs as well, that's the other one that's locked up close to around 5% as we speak. So these are pockets of strength and otherwise a fairly volatile market. A few more notable movers from the broader markets should come up for you on the screen. REC is down 3.5%. Bank of Baroda as well as seeing some selling pressure. And Nalco continues its up move. It's now up close to around 2%. Been mentioning alumina is in shortage. Aluminium has got a tailwind as well. Pricing at around $2,700 per ton. The street likes it. The best way to play it. Stock up 2.5%.
Okay, well, that's the picture for now. Still slightly lower, but there is a little bit of buying that's emerging. So now HDFC Bank, I mean, look at Bharti Airtel for that matter. More tech names are getting added on the upside. TCS Wipro have joined the bandwagon as well. M&M is seeing buying. So there seems to be a very, very clear flight to safety, quality, and, the ideas that the market believes will work come what may, but otherwise still quite volatile.
There's always something or the other, right? I mean, never a dull day in that sense. You got the start, which is down and out, and 23,370 is where we are trading at this point in time. Okay. Well, let's welcome in Venugopal Garre, he's Managing Director, India Head of Research at Bernstein. And Venu, welcome back. It's been a while. Venu, by the way, I must say, was one of the first to write about the slowdown. In that report, which I think came out in September, that things are slowing and markets are not paying attention, and they will eventually pay attention. They are paying attention now, Venu, front and square. But I will get to the market, etc., in just a bit as we go along. But I want to start by asking you, Samir Arora, an investor, quoted a Bernstein report I was reading. I read this tweet. I didn't read the report. I don't know if you saw it. He was talking about the solar opportunity, solar capacity here, solar capacity in the US, and what the solar sort of stocks trade at in terms of market value and what they trade at here. So I just wanted to begin there, Venu. Just that report and what are you guys really saying?
No, so actually that's a very different reference point per se. I guess the fundamental reality of what we are talking about eventually veers down to valuations. So if you were to look at specific companies on the solar manufacturing side in terms of where they are valued relative to potential manufacturing capacities of theirs compared to companies listed in the US with capacities, let's say similar, if you were to make it like to like, there was a significant overvaluation for those particular entities, right? So it was a very specific case, not really talking about solar market in general, but we're really pointing out to overvaluation in some of these sort of future growth areas at this juncture.
So what are those numbers for our viewers, Venu? I mean, so for our viewers, what matters is solar stocks, not solar market. And so your point is absolutely...
let me put it this way in a very simplistic way, since I don't want to get to a specific stock. Even if those stocks were to trade at 20% or 25% of where they are in terms of market caps, they would still be above fair value.
Oh, wow. And this is, of course, I mean, assuming, sort of a lot of growth and a lot of capacity addition, etc. But that is true both for US and India as well. That's the point you're making.
No, exactly. So I think the overvaluation is not there. The overvaluation is here, right? So that's like the fundamental difference. I think what has basically happened out here is that whenever any new theme or opportunity comes up, you tend to believe that opportunity will play out in a much, much significant way in terms of scale. And number two, most people believe that it is not just an India opportunity, but also an export opportunity. And then you sort of extrapolate that into the future. So that's where potentially where we were in specific cases and specific instances. I wouldn't really call it as a call in the market per se, but this just tells you the euphoria that has in general percolated into anything where you potentially see a theme.
Venugopal, hi, good morning. I have to ask you this because it's the news of the morning, right? What we've woken up to in terms of charges, indictment, SEC notifications on a large conglomerate here in India, the Adani Group, right? Now, the last time this happened, there was another report from Hindenburg. The market didn't take any notice because it was a research firm writing something. But this time, it is authorities and courts, though of a different country. The stocks are down. But I mean, I don't know if you have coverage in the group. Tell us if you do at all. And whether you think this will become a bit of a stock market issue. It did at the first point in time. I mean, when the matter first broke out 2 years ago. But how do you view the overnight developments and the implications for the market as a whole?
No, it's a fair point. I guess it's a topical question. In reality, it just happened overnight. Broadly, I'll give you a top-down representation of how we see from a market point of view, because I don't want to specifically talk about this group for various reasons. See, the approach to us primarily is that some of these incidents that we typically see are not just an India-specific incident. We have seen such cases globally as well on various MNCs over time, and it's very well documented over time, over the last 5 years, 10 years, and 15 years. Not just about market impact, we've essentially not even seen impact on those individual companies in terms of stock prices. Investors who focus a lot on those areas eventually ended up investing in those companies. So what I'm basically trying to hint at is anything of this nature tends to be very short-term, episodic. Cases keep happening. Anything linked to infrastructure and government, it's a global challenge in general. So one has to live with it, and those who invest in this really know the reality of it. So in Markets perspective, I think markets will forget it in a day, maximum in a week, and then life goes on. That's the way we would approach it per se. So I won't read too much into what is happening at this juncture. It is sub judice. A lot of things will play out. Eventually, we don't know what conclusions will come through. But I'm not really anchoring my market view based on incidents like this, because I've seen this happening globally over and over again. And some of the highest quality investors I've seen getting into those companies. I'm not talking about Indian names, even MNC names.
Hi, Venu. Good morning and good to see you. And as always, you're mentioning in your note, you're expecting a limited moderation in Nifty, a further but limited moderation in Nifty from current levels of around this 23,500. We've corrected close to 10% from the peak. Give and take everything. The earnings season has been very, very disappointing. The government is trying to do their bit now and pep up some kind of that capex spend. What's the downside first, to our current levels?
Yeah, so you're right. I have broadly been of the view that this year should end with high single-digit growth or returns for Nifty. And my viewpoint was that, look, this is slightly above FD rate, if at all. What we see from a market standpoint, Nifty is closer to my year-end target of 23,500. I didn't really get swayed too much on changing my target. This 23,500 target, by the way, was also based on higher liquidity remaining in the market. So to put it in construct, this implies 13 to 13.5% free cash growth for Nifty 50 stocks over the next 15 years. Now, that's not really an easy thing to achieve. So there was an element of cyclicality. There was an element of slight overvaluation that I had built in my model when I arrived at this target. So what I mean to say by this is that it is not that we are cheap from a market standpoint just because of the 10% correction of an overvalued market when it was 26,000. Going forward, however, the way I approach it is that this earnings weakness that I've been talking about, not just in September, since May, has been driven by a lot of factors, which is linked to capex evaluation, linked to consumption challenges in the economy, linked to margin fatigue that we were actually seeing across the board. So all that put together meant that whatever we were building for earnings, which is consensus, did not have room for upgrades. If at all, it had room for downgrades. First half, we essentially ended up seeing probably flat to marginal growth from a earnings standpoint. And second half, there's an expectation of 20% growth. I don't think that's going to play out. You will see some degree of potential earnings cut. Now, if you assume domestic liquidity remains and FIIs don't really exit significantly much more from here, and retail flows sustain at the levels that we have seen, I wouldn't really see the downside as much more than 5%. So it doesn't mean market becomes cheap. It's an overvalued market still, but the downside is not much. Very quick thing I want to highlight is that we are still early cycle as a country. There is still room for government to spruce up capex. It's not going to happen in 3 months, but probably over the next year. There is still room for rates to get cut over time. So it's not like liquidity is too rampant at this juncture. So there are a lot of these things which can eventually sort of support the market. When I say market, is the economy on a 12 to 18 month view.
Venu, you run a the India portfolio, right? And there are some small cap stocks also, which you, I think, added about a year ago, maybe a little more.
Yeah.
So for viewers, from a published perspective, 2 or 3 ideas which have fallen enough or which you still think are going to come out winners out of all of this?
Look, firstly, nothing has fallen enough. Okay, so I wouldn't really say that anything has materially corrected enough to say that it's value at this juncture. In fact, the most interesting thing is my split portfolio.
From your published list, maybe nothing has fallen enough. I can assure you lots of stuff has fallen 30, 40, 50%.
So,
but we're talking about what you published. Go on.
Yeah, so you mentioned about SMID portfolio. My SMID portfolio has stocks like Dixon Technologies and Keynes Tech and Muthoot Finance. Right?
Yeah.
They've not fallen at all. I mean, you can call it probably the art of selection, but these were really high valuation, high growth stocks. So I can't even say they've corrected off the peak. They're at the peak at this juncture. So I used to have a stock called Delivery earlier. I actually took profit at 450. So it's no longer a part of the portfolio. That's fallen to 330, 340. We're still not getting back in. But the reality is, on my SMID portfolio, there is nothing at this juncture. which I would probably say.
You seem like you're complaining, Venu. Don't complain. You should actually.
No,
take that
not at all.
report and send it to
I
your
don't want them to fall.
Send it to your clients. Well, this is what I said.
The art
In my
of
large cap portfolio, I would probably say that, look, let me say large cap portfolio or sectoral perspective, I think there is too much of negativity on frontline retail, for example. Don't want to mention names out there, but the reality is some of these physical retail stocks, have corrected quite a bit off the peak. Maybe those are the ones one could still look at, not right from bottom fishing perspective, but they are stocks which still have enough growth runway over the next 5-10 years. If we were to just point out certain aspects like this.
large cap retail. We in the studios here are guessing whether that was trend that you were hinting at.
Look, there are only two of them, Trent and DMart. As a house, we've got to buy on both.
Okay, all right, awesome, Venu.
Data, so I can share that.
That's helpful. Thank you very much. Always great speaking with you and getting all that perspective. Always a good conversation. Thank you so much for joining in. Just a quick peek back at the market, which kind of is stabilized. I mean, at least the fall hasn't gotten wider or deeper. 23,380 thereabouts is what we're looking at. That's about a little over a 0.5% decline on Nifty at this point in time. But we have a very, very special conversation lined up here for you. It is all about the renewable space and what lies ahead. This is the one space that the market is extremely excited about. And Nigel, we have a very special guest right here in the studios.
Well, that's right. Well, sir, welcome to the studio and thanks a lot
Thank you so much.
for joining in. The renewable energy space is picking up. Is actually center stage with close to around, I think currently the India renewable energy space has close to around 200 gigawatt, which is headed towards 500 gigawatts. So let's get straight to a conversation with Mr. Chalasani, the CEO at Suzlon. Thanks a lot, sir, for coming down. It's been a while since we met as well.
Thank you, especially in person.
Absolutely. So from around this 200 gigawatt to around this 500 gigawatt, could you tell us wind will constitute how much of this journey according to your estimates? And also we have a brokerage note that says that currently your market share is at around 25%, Morgan Stanley note. They expect Suzlon market share to move up to around 35 to around 40%. Do you think that's doable?
Yeah, first let's look at the macro level of 500 gigawatts of renewable energy. There are two aspects to it. One is that need of renewable energy because you need green power. More importantly, in India, it's extremely important from the point of view of competitive tariffs.
Indeed.
If the tariff is high, cost of kilowatt hour goes up, your market shrinks in power sector. As per CA study for 2030, which they've done the 8760 hours load profile, and if you want to meet that demand based on the least cost option. That's where they said that you need 100 gigawatts of wind.
Okay.
So therefore, the estimate is you need 100 gigawatts of wind to meet the demand what is predicted in 2030, and also that is the route for the least cost option.
Indeed.
So therefore, this fits both demand and the cost option. Today, currently we're at 47 gigawatts.
So doubling of that.
Yeah, 6 years left. We are right now inching closely. We moved 1.5x last year. We expect it to go to 4.5 today, again 1.5x, but it will touch about 6 gigawatts in our view. I'm talking about country, not us. And then reach about 8-9 gigawatts by FY27 and remain at that. And if not 100, we'll reach somewhere there, close by 90-95 gigawatts. But it will continue beyond 2030. It's a target, but then it's going to continue beyond that. In fact, the expectation is that you need about 140 gigawatts of wind by 2032. So there is a demand for wind because more importantly, the renewable energy is now replacing fossil fuel from the point of view of round the clock,
yes,
load following type of things. So there, solar, wind and storage together will play a role.
All right.
I think
so from around 48 gigawatt, we're going to be heading towards that, 90 to around 100 gigawatt. That is for the industry on the whole with regard to wind. Got that. What about Suzlon's role? The stock market believes, or various brokerage firms like Morgan Stanley, they say that from around 25% of the market share, you will outgrow the industry and take a bigger chunk, 35 to 40% by 2027. Doable?
See, right now, in the installed capacity, we're 32% in India, in the 47 gigawatts. So we're the market leaders there. And second is, let me not talk about the market share. Let me talk about what is feasible for us to do, because market share depends upon what everyone else does. Today, if you look at our current order book is 5.1 gigawatts,
Yes.
which is the highest order book we ever had in the history of 29 years.
Correct.
Okay, and it's growing. It's not that it will stop. And the second most important factor is that who are our segmented customers. Okay, the C&I segment, which is commercial industrial segment, is significantly growing in India. For they're using renewable energy to replace the captive.
Correct.
Okay, because of tariff arbitrage, because of green power, because of carbon neutrality, what they want to achieve. For them, the reliability of power supply is much more important because for their main business is something different. And we are here because with a 30-year track record in the country, and we just don't supply the equipment, we maintain them for 25 years for life of the plant. Every single turbine we supply in India is operated and maintained by us. Okay? We give them a comprehensive OMS. Therefore, in our order book today, 54% comes from that segment.
Okay.
That's continued to grow. Okay. There is an estimate that they need about 78 gigawatts by 2027. That's a total renewable energy,
Right.
wind and solar. That's the reason we'll continue to grow because there we are a preferred supplier. Second is public sector. Our share in the order book today is 24% comes from public sector. You know that NTPC, we got this 1165 megawatts of order, single largest contract ever awarded in the country. And then comes your bidding regime, which is growing significantly. So there's a huge potential. So therefore, we expect to grow. So don't hold me to what market share, but then we're pretty confident with our manufacturing capacity, which is further expanding from current 3.1 gigawatts per year, we're expanding it to 4.5 gigawatts by March. So therefore, there is every reason for us to believe that year on year will continue to grow.
So when you are in the studio with us, you must allow me to ask a classroom type question. We'll come back to Suzlon and your targets in just a bit. But I have a broader question on the viability and the competitive advantage of wind over solar. I mean, look at the kind of conversations that are happening on solar all around the country, right? In terms of just being the most viable option, the cheapest option, also tell us, I mean, right now, what is cheaper at current cost, solar or wind? And given the huge expansion on solar, is wind going to face a real challenge? But look at, NTPC's renewables sort of IPOs coming, and there's so much excitement around solar as well. So isn't solar a real threat?
This is a question which I keep facing every single place. Today, solar is around, let's say, 2 rupees 50 paisa at the bus bar. Wind is, let's say, 3.5 at the bus bar. But I've been on record saying that wind is cheaper than solar. Okay. I'm making that statement with full consciousness because you need to look at time of the day, demand-based pricing. That's one easy to check is when you go to the exchange, look at the price and the exchange during the solar generating hours and the wind generating hours. Wind generates in the peak period on the time of the day. If you look at, just take the latest one of July and August. During the solar hours, weighted average tariff was 2.53 and 2.38. 2.38
weighted average?
That's price from the exchange. Okay. Means you can buy at that rate from exchange.
Okay.
During the wind hours, it is 4.7 to 5.5. Okay. You're generating at 3.5, but actual value of that is 4.7 to 5.5. You're generating at 2.5, the actual value of that is 2.38 to 2.55. Now it's for you to judge which is cheaper. What is most important is that we forget about demand-based pricing, load profile. Wind actually generates when there is load, Indian load profile. One is time of the day, second is 2/3 of wind generation on an annual basis comes between May and September. And solar doesn't generate in the monsoon. So what is important is it's not wind versus solar. Wind alone cannot survive.
Demand adjusted.
Solar cannot survive because we are now talking about FDR rebates. We are talking about replacing the fossil fuel. It has to be wind plus solar plus storage. There is no debate on that.
That peak demand, Mr. Chalsani, is evening hours when demand peaks.
Yeah, especially the
load really goes up and there's no sun.
Especially what is happening is when I started my career, the evening peak is to be between 6 and 9.
Correct.
Okay, the TV used to come, Doordarshan used to come, and things like that. Today the evening peak is 6 to 12.
Correct.
Because our activity is going up.
Absolutely.
So that's the time wind generates. Solar is shut.
There was no Netflix back then.
So solar is completely shut. And then if you take solar plus battery, people talk about that and look at what is output cost.
Yeah.
You're putting 2.5 rupees solar power into the battery.
Yeah.
Battery doesn't generate.
Yeah.
There's a battery storage and conversion cost.
Yeah.
When it comes out, it is 8 to 9 rupees.
Okay.
How can that replace 3 rupees 50 paisa wind?
Absolutely.
So,
It just doesn't. It's easy way is not the right way to go.
Got it. I'm going to come to you. I have a couple of questions, but I just want to read out some news which is coming in right now. Just a quick detour. This is the Adani Green statement I want to read out. I mean, the first time we've heard from the group after, of course, everything which has happened out of the US as we woke up to the news flow. And this is what the statement says, and I'm reading verbatim. The US DOJ, that is the Department of Justice, and US SEC, Securities Exchange Commission, have issued a criminal indictment and brought a civil complaint, respectively, in the US District Court for the Eastern District of New York against our board members, Gautam Adani, Sagar Adani. The US DOJ have also included our board member, Vineet Jain, in such criminal indictment. In light of these developments, our subsidiaries have presently decided not to proceed with the proposed USD-denominated bond offerings. End of quote. That's essentially the statement which is coming through right now. I mean, doesn't really say anything we already did not know, but this is the first official statement which is coming in from the group, from one of the group companies. Back to the solar conversation, Mr. Chalsani. So for Suzlon, you're looking at going into non-wind businesses as well. Is that correct? Or
No. Let me explain to you what we do. We are the only Indian OEM which has in-house technology. We don't buy technology. We design, we manufacture, we execute, plus we operate for 25 years. There's a huge business for us as a service business.
correct?
Today we operate 15 gigawatts of capacity. In fact, if you look at, people don't know, in the power sector, agnostic of fossil fuel or the renewable power, we come in the top 5 as an operating company. Okay? Maybe after NTPC, Adani and Tata Power. That's the capacity of what we have. And then we are now getting into multi-brand as well for other non-Suzlon turbines. The one which you are talking about is that we have a component supply business, which is the forging and foundry. That's the one which supplies to us, supplies to our competition in the wind segment. They are now doing a couple of things. One is they're moving from wind to non-wind, like railways, defense, and various places. It's a component supply. Okay? And they're also significantly looking at exports.
But this is all within the listed Suzlon.
It is a subsidiary of Suzlon.
Okay, 100% subsidiary of Suzlon.
Yeah.
So they were supplying to you.
It's an
they were making
independent
components,
company.
But now they're looking at opening up the client list to defense, railways, etc. as well.
Etc., as well as for exports.
Okay.
But that's an independent company which just not supplies only to Suzlon in wind, it supplies to every single competition of ours.
Okay.
It operates completely independent of Suzlon. It's a component supplier. That's a business where we talked about expanding into non-wind.
Is that going to be, I mean, do you see a significant room for growth there?
Yes. Actually, today that is capacity being utilized, there is 20%.
Okay.
So there's a huge capacity utilization coming up there. So earlier, we always thought that we will divest that. So, but now we decided there's a huge amount of scope. We don't want to divest.
What are revenues last year, and what is the scope really? Because you know
So 20% of revenue is about 500 crores.
Okay. And,
Top line.
Okay.
So then you can imagine what is
because areas like railways,
2,500.
defense are also seeing a huge amount of make locally, right? So this ties into that.
Absolutely.
So you're saying when should we expect first orders from railways?
They've already started getting registered with them because it takes time with railways and defense to go through the process of registration of yourself. That's a process which started, I think, in next, let's say, maybe end of next financial year, the FY27, they would start supplying.
So from around this 500 crores, how do we see it trend up? Since you're saying that it's only at around 20% or the total capacity just mathematically appears like around 2,500 crores. So in the next few years, do you see this revenue number double?
Will.
Yeah.
But then if you look at our overall operation, it is still a smaller portion.
True.
Okay. While that business keep growing, will it significantly impact our top line compared to the way we are growing in the wind turbine business? I don't think.
So which is exactly where we want to come back and end. Now give us, and this is not just for this year, next 2 to 3 years, what is the kind of revenue CAGR, given the opportunity that you described in detail, sir, what is the revenue CAGR your shareholders can expect? And also in margins, because I mean in the first half, there's been a bit of a dip. In the past, I think you've stated 17 to 18% kind of margin band for the basic business, the wind business. Does that stand? Margins and top line growth.
I expect you to ask me this question anyway.
Have to, sir. I'm compelled.
No. Let's say that last year we did 700 megawatt. Here, first quarter itself, we did 550 megawatts. And then 1/3, 2/3 ratio, you know. So you all know what we are likely to do this year. As we stand today, 5.1 gigawatt is order book, which is supposed to be executed in the next 18 to 24 months. and more orders inflow will happen. It's not that it's static. Okay, you will keep seeing us announcing more and more orders as we move ahead. So when there is an order book of 18 to 24 months, it's your guess at how much we're going to do each year. Okay. So last
But
year,
we don't
You're a
guess,
better placer. We don't know the business. It's your business.
I don't ask me to put a number to it. I can say is that we will consistently grow at much higher rate compared to what we've been growing for not just for 1 or 2 years, consistently for the next at least 8 to 10 years. We see a clear growth path available there, and not just in the wind turbine business, which could be a little cyclical, but will continue to grow much bigger way in our service business, because every single turbine we sell, it comes with our service, plus the multi-brand which we acquired through Renewable.
Okay.
Yeah.
All
So
right.
therefore, it is not just the wind turbine business alone which you need to look at it.
Mr. Jalsani, you've seen the long journey of the power sector. I think really a veteran. Appreciate you coming down to the studios.
Thank you so much.
And taking out the time.
Thank you so much.
Thank you very much.
Good to see all of you in person.
Thank you so
Thank
much.
you so much, sir.
All right. I think we'll take note of the market, which is down 200 points. So I think we're at the low point of the day. And 23,300 is where we are at on the Nifty. We're going to take a quick commercial break here. We're going to come back with the management of CEAT, and we'll talk tires, falling rubber prices, end demand in the industry. Is that looking a little weakish? All of that with Arnab Banerjee, MD and CEO at CEAT. Stay with us.
Welcome back. Well, let's focus on CEAT then. That's the next corporate on our radar. Rubber prices have been fairly volatile. What's the outlook for the second half of the year? Mr. Arnab Banerjee, the MD and CEO at CEAT, joins us on the show. Hi, sir. Good morning, and thanks a lot for joining in, Mr. Banerjee. Give us a few basic details. I recall when we chatted earlier, you were talking about the price hikes till September, I think, were roughly around 3 to around 4%. But there have been price hikes post that. So could you quantify it from, for quarter 3 onwards in comparison to quarter 2? What is the price hike that you've taken? And also tell us about the raw material basket. The hope is that things start cooling off. Has that happened?
Right. So price hikes continue even as we speak, and we intend to raise prices even in the month of November. In passenger category, we are looking at price hikes in truck bus radial category. So across categories, in small bits of 1.5%, 2% max price hikes are happening. We are yet to cover up the gross margin gap that has come because of continuous rise of raw material. And if you remember, quarter 2 was about 5% higher than quarter 1 raw material prices. And in quarter 3, we expect the price hike to cool down. However, the quarter 3 prices are also expected to about 1.5% higher than quarter 2. So slight hike will be there in raw material prices before it kinds of becomes flat or starts trending down from quarter 4.
All right. And, if you could give us, I think we were discussing about rubber prices, the way it scaled to 240, 250, then it cooled off. I think it stabilized around 210. At current reckoning, what is that price and how do you see the trajectory moving from here?
So natural rubber prices came down to 180, 190 as well. And we are entering the tapping season where supplies will hopefully increase in the domestic market and across the world. If you look at global demand, there is no significant uptick that is seen in Europe or in China. So we expect the raw material prices to be, the natural rubber raw prices to be range bound sub 200. So that's what we expect at this point of time.
Mr. Banerjee, good morning. Prashant here. How's the third quarter panning out so far, sir, demand-wise? and which segment is looking robust and which is the weak link?
In OEM, there are some stress points, as we know. The MHCV market, the truck bus market is degrowing in OEM. The passenger car market is kind of flattish, maybe 1.5% growth. And the two-wheeler market is doing very well. They're catching up with the FY19 volume. So that trend continues in OEM sales. Replacement had been maintaining that is better. And that the truck bus market is growing in single digit, passenger market is growing in also mid single digits, and the two-wheeler market is growing better, near double digit, with a bounce back in the rural sales of tires. So that's how the domestic demand is panning out. Our order base looks okay on the international business front, though there are some headwinds on agriculture tires in the European market. And there is a temporary headwind also from the LATAM market because of duties that have been erected there. And so there's an adjustment in pricing that is going on there, which is expected to come back to even keel by Q4.
Do you supply to the US, Mr. Banerjee?
Yes, we have started launching our truck bus radial markets in the US. So that's just started this year. And we expect to launch our passenger car radial tires in the US by Q1 of next year.
Is there any tariff risk with the new administration in the US, or tariffs are not at risk?
It's a medium risk kind of situation. Our volume stake is not yet very high, and we think we will be able to maneuver even if there is a low level of tariff imposed on Indian exports. So I think we'll be able to manage given our product mix and the margin structure.
All right. What about the container availability? Have those issues gradually got sorted out?
Yes. The container availability is much better. The freight rates are coming down, but still elevated from where it was in the normal situation pre the geopolitical flare. But yes, there is a moderating tendency on the freight rates. Availability is no more an issue.
Okay, all right. Let's wind this down then with two key numbers, Mr. Banerjee. You warned us the last time around because the start of the year has been soft. Margins in FY25 will be low in comparison to what we have seen in FY24. Now, Q3 appears there could be some recovery, and Q4 we could see a full-fledged recovery. Volumes will pick up, raw material costs will be down, and price hikes as well will come into play. So how much lower do you think margins will be in FY25 in comparison to FY24, given the recovery we're likely to see? And also debt levels, they're holding at around 1,900 crores odd. You have some capex plans though. You're not expecting it to move too much. So does it stabilize at these levels?
No, debt levels is not a concern at all. Our debt EBITDA is much below our agreed norm of 3:1. It's around 1, the ratio. So that's not a concern at all. Our capex plan is also around 1,050 crores, which is about 6-7% of our turnover. Not a concern, and we have been maintaining that every year we'll have to do that much of capex regularly so that we keep growing in double digits every year. So debt, capex, not at all a concern. We are, I think, pacing it pretty well. In terms of margins, it will still be lower than FY25 because half of the year is gone. Q3, as I mentioned, the raw material prices will still go up, and it will only moderate by Q4. So 3 quarters of the year is going with an inflationary trend in the raw material price. So margins overall for the year will definitely be looking down as compared to last year, and maybe improve by Q4, and going into next year, it'll be better. And volume tendencies, growth tendencies are better in half 2, as I have been maintaining half 1. We expect to grow in double digit definitely in half 2.
Okay, all right, sir. We will leave it on that note. Thank you very much for joining in and giving us a perspective of the business and the outlook that is CAT. We do have to get back to the market now, which is now looking at a pretty slippery slide. The cut is over 200 points in the Nifty, and obviously levels have come and gone. The 200 DMA, that's history. The low of this recent consolidation, 23,350, I mean, that's also the bulls are finding it very, very hard to stay at that level. Actually, today's low has been even below the 23,300 mark. So let's see how this plays out. Let's pull up the Adani pack. Stocks are down anywhere between 10% and 20% across the board. and Adani Enterprises. There was a 10% freeze. It opened up. Now it's down to 15%. So this is how it's playing out. And watch the bank Nifty. It seems that there is a sentiment spillover on a lot of the large lenders as well. SBI is down about 5% as we speak. IndusInd Bank is down about 3%. In a bit, we'll pull up the list of a lot of the financial institutions that have exposure to the Adani Group. We'll just put that up as well. But it's a weak morning, to say the least. So let's try and wrap our heads around how to understand and interpret these overnight developments that surround the Adani Group. The fact that there is an indictment from the New York Federal Court. It names Mr. Gautam Adani along with several other officials from the company and a couple of the financial investors that took part in the various rounds of financing within the Adani companies as well. And then there are observations that the U.S. Securities and Exchange Commission have also made. The allegations are fraud. The allegations are bribery in order to secure contracts, within the Indian government establishment. We have with us Sriram Subramaniam, founder and MD in Govern, Sanjay Asher, senior partner, Crawford, Bailey & Co., as well as Mr. H.P. Ranina, who's a senior lawyer. Gentlemen, thank you very much for joining in. And the purpose of this conversation this morning is to really understand how Indian shareholders should look at legal developments which are not in our jurisdiction. This is the US SEC talking, this is a US court talking, but the implications are playing out here in the Indian stock market. Sanjay Asher, if I could start with you. For an Indian shareholder, this is fairly perplexing because the Adanis were given the clean sheet by Indian courts. But now comes these developments in the US. What would your first thoughts be?
Oh, these are allegations which are there. Now, obviously, Adanis will have to fight it out in the US, before the US regulatory authorities and the US court. So we will have to wait and watch as to what happens there. Now, as far as the Indian courts are concerned, they have given a green sheet, a complete green sheet to them. So as far as India is concerned, there is no worry. And as I understand, there is a process of settlement as well under the US law in case there are allegations on the FCPA or under the bribery laws in the US. So I don't think this is anything which is worrisome. It's like a fizz. And yes, allegations are there. There have been some observations here and there in relation to bribery allegations. But to my mind, there's nothing earth-shattering in this. It's always possible to settle this, and the dust will settle down.
Okay, let's get in other experts to weigh in as well. Mr. Sriram Subramaniam, do you think this is just going to be fizz and ultimately it'll go the settlement way in US courts and with the SEC?
It could happen, but I would like to correct here that the Indian courts had looked at it from a violation of the minimum public shareholding, the Hindenburg allegations, etc. There were no bribery charges per se. This is the first time there is a criminal indictment from a bribery charges. The Indian courts had not looked at the Adani Group from that perspective deeply. So the allegations were more to do with the minimum public shareholding, violation of securities law. But this is a much more serious allegation from a perspective of bribing public officials, bribing to get contracts, etc. And the fact is that these securities have been missold in the US. That is much more telling. So the merchant bankers who sold all those will be indicted. So yes, it is a known fact that many business groups in India need to bribe political parties and bureaucrats across states, across central governments, etc., to win contracts. But for the first time, a large Indian business group has been indicted on bribery charges made in India.
Let's bring in Mr. Ranina as well. Mr. Ranina, the same opening question to you. As of now, there is nothing new legally on ground here in India, but the allegations raised are fairly serious, and the indictment actually sort of names Mr. Adani and several other officials as well, several institutional investors as well that were part of the fundraising rounds. Do you think there could be wider implications for the group here in India?
Yeah, good morning, Surbhi. I think there would be wider implications because this is a very serious charge of bribery. and it's an indictment which is done by the U.S. District Court. Apart from that, the SEC has also come up with certain allegations. So certainly there will be attempt to come to a settlement, and heavy fines will be definitely imposed. That's what I'm sure about, if the charges can ultimately stand. So it will definitely have an impact on the Indian market and Indian shareholders, because certainly the money will have to come from Indian companies. Even if we have to settle and pay a hefty fine, which will run into millions of dollars, it will definitely impact the Indian businesses and ultimately the Indian shareholders. Of course, the courts in India are not concerned with it, because this is a crime. They say this is a crime committed in the USA. But what I'm worried about is the implications, both in terms of very heavy pecuniary fines being levied on Indian companies, as well as, of course, on the Indian promoters, reputation-wise and otherwise. So there will certainly be a substantial impact on Indian Adani company shares.
Yeah, absolutely. That's a great point you raise, that maybe there is no legal implication, but there will be, in all likelihood, a financial implication and, reputational issues that would be at stake here. Take that point, sir, on board. Let me go back to Mr. Sanjay Ashar. Sanjay, you said that this could be settled, and let's take on board what Mr. Ranina is saying. It's an unfair question, actually. I shouldn't be asking you about US law. But typically, when the indictment includes charges as serious as, alleged fraud, bribery, are settlements easy in the US?
As far as the FCPA charges are concerned, to my mind, yes. There is a process whereby one can settle the matter. As far as the criminal indictment is concerned, we'll have to see as to whether there's possible for a settlement on that.
Okay, but could this at all lead to any kind of further moves, activism here in India? I mean, I'm just asking a question out of the box here. Could this lead to any kind of fresh legal challenges being opened up in India?
There could be. There could be, yes. There could be fresh legal challenges which vested interest people would initiate for sure.
Mr. Ranina, would this be sort of a fresh case filed in Indian courts? That's still a possibility that investors must keep in mind?
Well, they can file a case for, say, removal of the concerned people who are involved in corruption or whatever. So in case the companies shareholders say, we don't want the person to be in the management of the Indian company, since serious charges have been filed against them and they have been indicted. So that could lead to litigation. But as far as damages are concerned, as far as that will be according to the American law, and nothing can be done in India because these are allegations in America. But certainly it will affect the Indian management. That's for sure. Sure.
Absolutely. Yeah. So with that, let's come back to Mr. Subramaniam.
Yeah.
And Mr. Subramaniam, that's the real question, right? Now, legally, whatever has to play out will play out in the US. As of now, there's no fresh legality in India. But like, our legal experts have been pointing out, this does have implications for Indian shareholders, whether it is fines or, settlement fees, whether it's reputation, very senior management personnel being indicted. What recourse do Indian shareholders have, and what would you advise to a lot of the investors today who are watching share prices fall?
Definitely stay out of groups or stocks which have, I would think, corporate governance, I would say, issues. Two is obviously many long-only funds would shy away from this because of their reputation from taking positions or would unwind their positions. Three is even project financing for Adani Group will become very difficult. And so because they have announced a slew of projects for them to raise funding from many agencies or many investors or banks could become difficult if these charges stick and there is this reputation issue. And the cost of borrowing will also increase phenomenally for them, at least 200 to 300 basis points, I would think.
So I think this is a developing story. We have to wait and watch and see how it goes. And we will weigh in on all you gentlemen and your expertise again as more developments take place. Thank you very much for joining in. As we wrap this up, I'd like to just pull up the statement from the Adani side. This is the one statement that we have, and maybe we'll get more clarifications as the day and the week progresses. Let's pull this up. Adani Green, just to place it on board for our viewers as well. Adani Green says the US DOJ and US SEC have issued a criminal indictment and brought a civil complaint, respectively, in the United States District Court for the Eastern District of New York against our board members, Gautam Adani and Sagar Adani. The US DOJ have also included our board member, Vineet Jain, in such criminal indictment. In light of these developments, our subsidiaries have presently decided not to proceed with the proposed USD-denominated bond offering. So right now, the only thing that we have from the group is that they have taken all of these charges on board. They've acknowledged them, and they've said they're not going ahead with the US dollar-denominated fundraising, the debt fundraising that the group was looking at. That's all we know. Maybe we'll hear more from the group as the day progresses. Let's see. Wait and watch on this one story. All right, as we move forward and take our next break on the show, word on the markets: 173 down is 23,350. Back in just a moment with more. Welcome back. Let's straight away head back to Mitesh to get a sense of trade right now and what can be possibly done. Mitesh, so I guess the thing is that at least there's some buying at dips that's coming in. It's not, at least not now, it's not a one-way fall. What would your advice be on the index and, of course, stocks?
So on the index, I'm still avoiding. The good thing is that the Bank Nifty hit the 200-day average. The low for the Bank Nifty is at about 49,787 and the 200-day average is at about 49,820. And it's managed to bounce back from there. So I think, the Bank Nifty can bring some stability, but we are still not buying it. I'm still not sure, whether this bounce back will extend because the Nifty is still weak. So, hoping that the Bank Nifty, if it gives some kind of a buy signal on the hourly to hourly charts, maybe then explore some call option positions. But till then, I think staying away. And on the stock side, I have one buy and one sell. So a long one, Jubilant Foods with a very tight stop at 603 for targets of 630. And ITC after a long time is looking negative. It could hit the 200 average, which is at about 450. So sell here with a stop at about 463.
Okay, all right, got that. That's, on individual names. Just before we let you go, on the Adani group, any of the stocks, Mitesh, I know this is too much news flow right now, but on some of the larger Nifty names like Adani Enterprises, Ports, what would the recommendation be? What are the critical levels to watch, given that they're already down 15-20%?
So I think the bigger problem is that they're down circuit limits. I think, both Adani Ports and Adani Enterprises. And I don't know when this thing will stop. So, even if you look at the slightly longer term charts, go back to the monthly charts and see where the long term supports kick in, they've already broken the immediate ones. The bigger support for Adani Enterprises is at about, levels of 2,300 to about 2,200 zone, which is where the stock had bottomed out in November of 23. So I think maybe around those levels, you might see, some stability coming. I think as I speak, it's hit the 20% circuit down at 2257. So I don't know, where it will stop. If that breaks, you might see some 2000 levels very soon. So for me, I think both of them avoid till you get some kind of reversal signs, till some accumulation happens. Yeah. No point trying a long trade yet.
No, absolutely. Got that, because those circuits are opening and then the next 5% down limit is getting hit. Got exactly. That. Mitesh, thanks very much. Touch base with you later during the course of the day. For the time being, we will take a very quick break and then it's time for our special segment. It's the economy. Lata will be in conversation with A.K. Bhattacharya and Aditi Fadnis of Business Standard to talk about the possible impact of the Maharashtra and Jharkhand elections on centre and the economic policy.
Welcome back. Let's shift to political economy now. Most of the exit polls predict a clear win for the BJP-led Mahayuti alliance in Maharashtra and in Jharkhand as well. The NDA is expected to win. However, there are two caveats here. One, in Maharashtra, the Dainik Bhaskar poll predicts a win for the Congress-led MVA by a slim majority. And in Jharkhand, the Access My India poll also shows a win for the incumbent India alliance. Now, a second caveat, exit polls have been wrong. They have been wrong in the Lok Sabha polls, wrong in the Haryana polls, and wrong even in the US elections. So what we are discussing today is a little speculative, a little hypothetical. What impact will a win for the BJP-led groups in Maharashtra and less so in Jharkhand have on central government working? And likewise, what impact will a loss to the BJP-led coalition have on central policy making? Joining me are A.K. Bhattacharya, editorial director, and Aditi Fadnis, political editor at Business Standard. Aditi, Mr. Bhattacharya, thank you very much indeed for joining us. Aditi, let me start with you. Let's go with the assumption the exit polls are right and there is a BJP win, BJP-led coalition win in Maharashtra. Do you see more confident policy making? What's the impact?
So let's look at the issue in a different way, which is that if the BJP is unable to reach the majority point, can an MVA government withdraw some of the schemes that the BJP has offered, BJP Eknath Shinde alliance? The most major one among them is the Ladki Bahin scheme, which is an allowance for women in below a certain income threshold household. About 4 or 5 tranches of this have been paid all at once, and women have received 7,500 rupees in their bank accounts just a few days ago. This is a very powerful motivation for women to come out and vote for the government or the group which they think is going to continue to give them this. The jury is out on whether this kind of this is welfare or it's revenue. There is an argument that giving money straight into the bank accounts of women empowers them. There is only so much free food you can eat. There is only so much free power you can consume. But if you give them money, they might use it as capital to set up some small business. They might, and when you combine that with the free transport scheme, which many states have launched, it just propels them into the labor force.
What's your point, Aditi? So your point, Aditi, is that it spurs economic activity. What's the political economic takeaway from that?
Well, obviously, it puts pressure on state finances, and somebody has to pay for this.
Yeah, no, I agree. State finances everywhere are under pressure.
In Maharashtra.
I take your point. And in fact, the MVA has come with 3,000 rupees and free bus travel for women under a particular threshold. So either victory for the either groups would mean strain on the state finances. Let me get AKB's first views. AKB, my question is really more central government. And I'll tell you where I'm coming from. There are people who are saying that the central capex took a beating in April, May, June, obviously because there wasn't a government in place. But it also took a beating in July, August, September. Capex didn't come up because bureaucrats don't sign on when they are not very sure that the existing political dispensation will continue for a long time. I mean, they want to be very sure, lest they are questioned. Remember, H.C. Gupta and P.C. Parakh issues. So, capex and government decision-making at the lowest level slows when the majority for the centre is not that strong. It is in that light I'm asking you, what impact can a Maharashtra, now let me turn the question, a Maharashtra loss have on centre?
Well, I wanted to differ with you on that assumption that when the government is unsure about its political future, whether at the states or at the centre, the capex allocations slow down. I think what has happened in the last 6 months, the capex slowdown is not because of government indecisiveness or political considerations, but more because of a poor absorptive capacity of the system itself. You cannot possibly have a situation where the capex is rising at an average compound annual growth rate of 29% for the last 4 years and continue to pump in the same money to the same sectors year after year. So there is a problem of absorptive capacity. So I don't think the capex slowdown is attributed to government's indecisiveness at the center.
Excellent. I mean, that point is taken. I take your point. Let me repeat the question then in a better way. I was wrong in my initial adverbial clauses. Just plain. A defeat, what does it mean to the central policy?
Well, I think a defeat essentially means a little more strain on the finances of not just of the center, but also of many state governments that are will go into elections in the next next year. You have got 2 big elections, Delhi and Bihar, and then the year after. So I think the freebie politics will definitely get a further fillip. That's number one. My sense is if the BJP fails to form its government in Maharashtra, the budget that is being prepared right now will be less aggressive in addressing many of the concerns, many of the ailments that the economy suffers from, both on the demand side as well as on the investment side. So I think the government will be less empowered in that sense, or less assured of itself in addressing the concerns. I have also think it will have an impact on the kind of deliberations on the recommendations that the Finance Commission is looking at in terms of allocation of resources, whether vertical or horizontal, in the coming forward, because they are going to come up with their interim recommendations next year. So I think a loss will have an impact, and I don't know whether it will have a political impact in terms of one country, one election, whether the center decides to expedite its plan, or does it want to implement it or hold it on for some time. So there are 3 or 4 such things that I see if the BJP fails to, or the Mahayuti fails to form its government in Maharashtra.
Okay. So Aditi, AKB, both of you are telling me one thing, that state finances are definitely going to feel the pain, especially if the BJP loses, because it will clearly give a fillip to more freebie kind of promises in coming elections. But Aditi, to repeat the question I asked AKB, what can be the impact of a BJP win on the center? Would it be more decisive? Would it be a little more fiscal rectitude, which they can stand by? Will there be any positive outcome of a BJP win?
Well, politically, there will be certainly a boost of morale, because frankly, whatever they may say on record, internally, morale of the BJP was quite low after the Lok Sabha elections. So certainly there will be a boost of morale, and some of the things that they might have been a little leery of doing in the past, they will be more, they will feel more empowered to do. Haryana was a big boost, and Maharashtra will be an even bigger boost. That said, I think whichever government comes to power in Maharashtra, the very first thing that they have to address is the cost of doing business in Maharashtra. Corruption is very high. I'm not saying this. Several chambers of commerce, several groups of industry, including a report by the KPMG, German Commerce Association, which has done a survey of 82 companies which have invested in Maharashtra, 82 German companies, are saying that we just don't want to stay on in Maharashtra, and if possible, we'd like to exit, because corruption is very, very pervasive.
Okay. Oh, that's a separate issue. I agree with you, especially at a time when Karnataka is making policies for GCCs and Tamil Nadu is making policies and helping, soliciting investments in, assembly line and for iPhones, etc. This puts Maharashtra in definitely a very bad light. So that's a key takeaway for Mumbai and its hinterland, which benefits from industrial growth. AKB, any final takeaways? I mean, if there is a victory, do you think there is greater discipline? At the moment, we should go with the supposition that there is a victory for the BJP in both
Yeah.
state?
My sense is that, we have to look at Phoebe politics through a different kind of a lens. You refer to that in a certain way, that it does boost economic activity in an indirect manner. I think the Phoebe politics will continue. It will grow its roots even further, but it will also mean that the states that are stronger, the states that have got crafted better policies to attract more investment, therefore boost growth, will probably in a better position to manage the excesses or the impact of those freebie politics. So therefore, if you don't manage your state well, so the states that are doing better, and if the center has better finances, they will be able to withstand the impact of freebies. But I don't think the freebie politics is going to go away very easily from this country, particularly at a time when economic inequalities and the need for underprivileged sections, some sort of welfare transfer schemes are very much needed. So freebie politics will continue to grow, but the states that are better off financially, they manage their finances better, they attract better, more investments, like Karnataka and Tamil Nadu, probably will in a better position to withstand this assault of freebie politics, which is not going to go away.
Fair point. Thank you very much, AKB and Aditi. We have to stop the conversation here for want of time. But take your key point that the whole culture of freebie politics is going to take its toll on capex plans of states, sheer financial power of states. But the other point that the two of them are making, until now we were talking about a north-south divide with southern states becoming more powerful, richer economically. Now what both of them are pointing out is that within the south there is likely to be a divide, with Maharashtra lagging and the other four southern states probably snatching a sprint ahead of the once most industrialized state of Maharashtra. There will be impact on Finance Commission, as AKB pointed out. There will be impact on the delimitation. There will be impact on caste census. I mean, there are huge issues where this incremental win or loss is going to have an impact. But that discussion for another day after we know the results on Saturday. Thank you very much, Aditi and AKB, for joining us. We have to wrap up on Bazaar on the note that the market is reeling, but from a very, very different pressure. We will continue discussion on the impact of this Adani news as well on stock markets. That's it on Bazaar. Chartbusters coming up after the break.